Welcome to the Real Estate Brief. Now, if you find the side effects of real estate news are lasting longer than 4 to 6 hours, you should contact your doctor or medical professional. Trade policy tensions, particularly with Canada, is causing a bit of unease among Canadian investors who have historically been significant players in the US real estate market. While substantial Canadian capital continues to flow into US markets, there's a growing discussion about potential shifts in investment strategies, particularly among large institutional investors. Here we have this whole will they, won't they drama between trade policies and real estate investments. It's like watching a soap opera, but instead of love triangles, it's about tariffs and tenant leases. But alas, even the more seasoned real estate gurus are scratching their heads wondering if their spreadsheets need a trade war contingency column. A proposed golden visa program aims to offer green cards to foreign investors who drop $5 million. This proposal discussed by Trump could flood high-end commercial market with capital, especially luxury condos and prime office space. However, this raises big questions about the existing EB-5 visa program, which has a much lower investment threshold. Experts are divided. Will this new visa supercharge the luxury market, or will it cannibalize a crucial funding source for developers? The whole build-a-wall narrative makes a lot more sense now that Trump is also selling a $5 million ticket for an escalator ride over it. This golden visa thing, it's basically a pay-to-win for American citizenship. You drop $5 million and bam, green card. It's like a subscription service, but instead of streaming shows, you're streaming the American dream. Forever 21 is slated to close all 350 stores in a second bankruptcy filing, highlighting the continued struggles of traditional brick-and-mortar retailers in the face of e-commerce dominance. This closure leaves significant vacancies in malls across the country, posing a challenge for landlords, impacting the overall viability for traditional retail spaces. The bankruptcy reflects the broader shift in consumer behavior towards online shopping and the need for mall redevelopment. Oh, what? No! Forever 21? Apparently, the fast and fast fashion refers to how quickly they go bankrupt. They're blaming Shein and Temu, which is like blaming your alarm clock for being late to work. Sure, they're a factor, but maybe, just maybe, you should have adapted. Either way, mall landlords are now faced with the existential question, what do I do with a giant empty box? Construction costs are experiencing a significant surge from builders who are already increasing prices up to 20% due to growing tariff fears. This escalation isn't reflective of current pricing, but instead of what future pricing could look like. You know? You'd think they'd wait for the actual tariffs to hit, but no. They're just preemptively gouging us because better safe than sorry. From a developer's perspective, this situation necessitates exploring alternative sourcing options. Consumer spending patterns are shifting towards essential goods and services due to economic uncertainty, impacting retail sales in sectors tied to discretionary spending. This trend reflects a cautious consumer approach, prioritizing basic needs over luxury items, and affecting the performance of commercial real estate segments dependent on non-essential retail. Imagine that. People buying groceries instead of diamond-studded dog collars? What? Grocery-anchored centers and discount stores are your new best friends. Just remember, in a recession, everyone loves a bargain. Freddie Mac's CEO has been fired amid an ongoing staffing shakeup, raising concerns about stability within the government-sponsored enterprise and its potential impact on the mortgage market. This leadership change could affect lending practices and indicates a potential change in priorities and a desire for new leadership. What the mortgage market really needed was more drama. It turns out strategic vision is really just code for you're fired. They're doing a little spring cleaning, but apparently DeVito didn't make the cut. Whoops. Ollies Bargain Outlet is planning to accelerate its store expansion, targeting 75 new store openings in 2025. This expansion strategy is made possible by the acquisition of 40 former Big Lots store locations from the recent Big Lots bankruptcy and store closures. This move allows Ollies to capitalize on market disruptions and increase its market share, reflecting the growing demand for discount-driven retail. One company's trash is another company's treasure. Ah, the beauty of capitalism. They're basically saying, hey, we'll take that prime real estate, thank you very much. 75 new stores in 2025? Ambitious. Look, I think it's great that Ollies is taking this opportunity to expand their footprint, but didn't the bankruptcy of Big Lots kind of prove that discount retail didn't work in those locations? Federal agencies are collaborating to utilize federal land for affordable housing development, aiming to increase the housing supply in underserved areas and address the ongoing housing crisis. This initiative seeks to leverage government resources to tackle the shortage of affordable housing, potentially creating opportunities for public-private partnerships and impacting surrounding property values. Finally, some good news. The government's thinking long-term with this federal land housing thing, which is good. The thing is, to really make it work, it's got to be more than about just building houses. It's about making sure people can actually afford to live there for good, making them part of the community. Hopefully they'll remember to include a bureaucracy-free zone for residents. The self-storage market is showing signs of stabilization after more than 2 years of declining rental rates. Forecasts anticipate a gradual recovery projected to commence in late 2025. This recovery is expected to be supported by a decrease in new self-storage supply entering the market. Self-storage is kind of leveling out. Good time to take a look at deals. The slowing rate of rental decline coupled with project recovery in late 2025 suggests there might be a potential turning point, at least for this asset class, especially in markets with limited new supply. Let's face it, we're all just one Marie Kondo episode away from needing a 10 by 10 unit. And that's it for the real estate news this week. I hope that I'm still in your strategic vision for next week's real estate news. Make sure to get subscribed and I'll see you in the next one. Oh, I'm fired?